Hey guys, it's Cryptrader again. In this video I'd like to discuss the topic of liquidity as it relates to the mainnet and a few tips that will help you navigate the waters when you are onboarded. Before I get into that, I just want to give a short update on how the volume and liquidity has improved the last 2 weeks. The volume with the additional onboarded traders has been pushing $20 to $40 million daily. And the way that is calculated is by taking the 24-hour volume here, which is in contracts. You multiply that by the contract value, which is down here, which is 193.5 Digitex per contract, and then you multiply that by the price of Digitex, which right now is currently 3.9 cents, and that gives you around $44 million traded so far today on Digitex. Keep in mind this is with less than 100 active traders. Just imagine when there are a few thousand active traders all scalping for 1 to 2 ticks on the ladder. It will escalate rather quickly. Also, for the liquidity, the last video I made, we were struggling to have 100 contracts per tick. However, now we're experiencing 500 to 1,000 contracts per tick, depending on the time of the day. So like right now it's a little slower, but earlier today we had about 1,000 contracts per tick or more, depending on what the price action is doing and what time of the day it is. With more traders, you can expect this average liquidity per tick to scale proportionally as well. With a few thousand active scalpers, we could expect some of the most liquid order books in the crypto space. Now that you have an idea of how liquidity and volume has improved the last 2 weeks, let me get into the tips I'd like to offer new traders that have been trading on the testnet and will be making the switch to mainnet. Tip number 1, do not over leverage yourself. So what I mean by not over leveraging yourself is keeping leverage low to avoid risk of liquidation. Wisely, Digitex has limited the leverage to 10x for now until liquidity improves and stops are implemented. For those new to leverage trading, the higher the leverage you use, the higher your risk of being liquidated is. Liquidation is when 50% of your margin you put up for a position has been exceeded in an unrealized loss. The Digitex liquidation engine will then execute a market order to close out your position. So not only do you lose the 50% of margin from the trade, you lose the other 50% to the insurance fund as maintenance margin. So my recommendation until stop losses are implemented and liquidity has further improved would be to keep the leverage below 2 to 3x as a beginner. What this means is that the spot price will have to move against you at least 16% in order for you to get liquidated. As long as you are scalping and you do not leave a trade unattended for a long period of time, you have very low risk of being liquidated. So when you want to set your leverage, go up here to where it says X10 and click that, and you can dial this down manually like this to get to 3x or 2x leverage, or you can use these little plus or minuses to get to what you need. So let's just say you want to do 3x, then you'd have to hit confirm here, and notice it gives me the max number of contracts that I can use for that leverage as well. So when you have your leverage selected, just come here and click confirm, and now you'll see that it says I'm at X3, which is 3x leverage. And if I just do an example long here, I have one contract selected. I'm going to take a long by clicking right here. You can see that I'm in a long position, and if you look over here under the open positions tab, you can see that it has my liquidation price. So since I'm using 3x leverage, my liquidation price is pretty far away. It's about 16% away from the current price. So that what that means is the spot price would actually have to go down to 8,050 for me to get liquidated. And when I get liquidated, I would lose this amount of margin right here. So as you can see, the risk is pretty low that I would get liquidated on this position with 3x leverage. If we go back to just the other day, you can see this as a perfect example of why you don't want to be highly leveraged. Bitcoin price moved down from, in a 5-minute candle, it moved down from 8,850 all the way down to a price of around 7,980. Which was about a 10% drop. So if you're using 10x leverage, you would have gotten liquidated on that drop in the span of a 5-minute candle. So if you were to walk away from your computer for more than a couple minutes, you could have come back and had a liquidation. And so that's why it is very important to use lower leverage, and also do not leave a trade unattended when you're scalping. Now, tip number 2, be cautious of market executing orders. So there's 2 ways that you can market execute an order currently on Digitex. The first way is through the tools. So if you go to the market tab here, you can market buy or sell by clicking buy or sell here, enter your quantity. And so what I want to caution you about is if you're wanting to market buy or market sell, either way, let's just say market buy in this instance. If I wanted to market buy the max number of contracts that I could afford, which is 9,300, if I market buy, it is market buying up through all of this liquidity. And if you look at the top of this column right here, it says 4,600, and that fluctuates obviously with how much contracts are being added and removed. But 9,000 contracts would exceed the liquidity that's even on the sell side. So what would happen is if I market bought with 9,000 contracts right here, it would actually eat up through every bit of liquidity that's on the ladder, and I would have major slippage on that market long position. Same way with market sell. If I wanted to market sell 9,000 contracts, I would sell into all this liquidity on the buy side right here, and you can see it's totaled right here at 3,900 contracts. So I don't want to market sell into all of this liquidity because I would have major slippage on that short position. The other way that you can do a market executed order is if you're already in a position. So on your open positions tab, if I was to enter position, let's just say I go long here, so I'm filled, I have 250 contracts long. Let's just pretend instead of 250 contracts, this is actually 25,000 contracts. And so I want to get out of this position really quick. And so when I do that, a lot of people would want to do that by clicking this market execute button, because if I'm in a long with 250 contracts and I click this market execute button, it'll do a market sell order to close out my long. And what that does is it eats up through all this liquidity on the buy side. And so pretending that this is 25,000 contracts instead of 250, you can see how I would have major slippage because there's only 5,000 contracts on the bid. And so this is very important that you are aware of this and that you don't use this market execute button if there's not a lot of liquidity to fill the position that you're currently in. And so since I'm only in 250 contracts in reality, I could do this market execute, because if I do that, then you'll see how it just went through that one order. It didn't even get down through this because there's 2,000 contracts sitting right here. But if that was 25,000 contracts, it would have ate through every bit of liquidity on the order book and would have most likely had major slippage. So those are my tips for this week on how to navigate the mainnet. I hope it was informative and helps you avoid some beginner mistakes when making your debut into real live trading. Stay tuned for more videos from me, and you can catch my live streams on Cryptrader Trading Academy YouTube channel. I will see you guys next time.